April 2nd marks a key date for global trade policy. As nations prepare for new potential tariff measures, financial markets continue to adjust to this ever-evolving economic snapshot. With several countries already proposing concessions and policy changes, how could these developments impact different sectors as well as investment strategies? We're going to break that all down for you right now and more on UBS Trending. Hi again, everyone, and thank you for joining us. My name is Anthony Pastore, the host of UBS Trending. Thank you for being here and welcoming my guest, Octavio Morenzi, the CEO and founder of Optimus. Octavio, nice to have you. I was just telling you right before we started that it seems like every day the news headlines shift a little bit. So the direction of the wind sort of goes slightly off to the right or to the left or down the center. So there's a lot of noise out there right now, and everybody's talking about tariffs and, of course, this upcoming April 2nd deadline date that's been floated out there. From your vantage point, what is the one question that no one's really asking here about the tariffs? Because we could read the headlines and what all the different countries are saying and how they change on a daily basis. But what's the thing that no one's asking?
I think Trump has very much modeled himself after McKinley. For whatever reason, this is Trump's hero. And McKinley was famous for bringing all sorts of tariffs. Even before he was president, he came up with sort of a tariff act and really punished all sorts of exporters or importers into the US. And it ended up being very, very unpopular indeed. And it cost the Republicans a terrible election loss when consumers became aware that they were paying much higher prices for goods that were being imported. So my question is, and I think no one's really asking this, is how is Trump going to pull this off and not have an enormous electoral defeat if he really does implement tariffs across the board, across all sorts of different products, across all sorts of different countries? It's hard to see how he's going to do that. So how is he going to keep inflation under control if he implements his tariffs? I don't think he can. If he really goes forward with it, we're immediately going to see a spike of inflation, and that's going to be massively unpopular, just as it was with Trump's great hero, McKinley, who was not able to pull that off. It was a very deeply unpopular thing to do. And I think that's a question that the Republicans, more than anyone else, should be asking themselves, is how are we going to pull this off? How are we going to avoid a terrible reaction at the voter at the ballot box when time comes?
We keep hearing phrases like short-term pains for long-term gains. I think what the market is saying throughout the volatility we've seen the last couple of weeks is we're only focusing on these short-term pains right now, but that's why everybody's looking to this April 2nd date. So what do you expect to come from that? I mean, it's very hard to answer that question since there's a lot of unpredictability, but what do you think April 2nd looks like?
Well, we have seen enormous shifts back and forth. And I think what's likely to happen is that a lot of these things will be pushed out into the future. Trump has already spoken about exemptions for all sorts of different countries, that he's going to be nice to all sorts of people and not be too severe in terms of the tariffs that come down. But I think the fundamental problem remains if he really puts tariffs into place, and he seems to be a fan of tariffs for the sake of tariffs almost as a way of generating revenue. He basically views this as a way that we're going to generate lots of cash and we're going to get rid of the income tax because the foreigners are going to pay it. It's not going to work out that way. I think countries do not like to be pushed around that way, or don't like to be seen as being pushed around that way, and will react quite negatively. So they might, cut off their nose to spite their face and put retaliatory tariffs in place or other blockages, other barriers to trade that are a bit unpredictable at this stage. So I think if he does put tariffs into place for a large number of goods, as he's suggesting, we're going to see a spike in prices. Things coming out of China or Canada or Mexico, all these places are going to become more expensive. And there's simply not the manufacturing capacity in the US to suddenly replace those things. So if you're going to tax now cars coming out of Canada at 25% or 40%, or whatever the number is that they're floating out there, which changes every day, there's no way that in the US you can ramp up capacity to build those cars in any sort of meaningful time period. I mean, imagine how long it takes to make a car plant. You need to find the property, you need to get the plans, you need to get the permission, you need to get the construction company to build it, you need to buy the robots, hire the workers. We're talking about a 3 to 4 year endeavor before the first car rolls off the assembly line there. So Trump will no longer be around then. So in the short term, and short term, I mean medium term of 3 or 4 years, we're looking at higher prices rather than increased manufacturing capacity within the US.
Yeah, and I think there's the word stagflation has been sort of thrown around a little bit more as well as we look down the road a little bit. And obviously, the Fed has a very important job to do here in the U.S. to keep their mandate of strong job growth as well as lower inflation. So it's a tough road. And I look at these headlines about what's going on in the European Union, and you're also speaking from a European perspective as well, sort of they're delaying tariffs on American whiskeys, while the Trump administration is saying that we're going to hit them with auto tariffs, but maybe not as much, and they'll be more kind of concentrated and very specific, and levies may not be imposed. So there's a lot of back and forth, and as you said, some concessions perhaps happening. So if we're as an investor, what should they or we be looking out for if the tariffs do end up taking place, as has been sort of announced along the way? We're looking at 25% tariffs on China, tariffs across the board as a sort of a standard number. And if Trump and these countries can break a deal, on the other hand, what does that look like for investors and the markets here?
So if there are tariffs and retaliation in terms of tariffs, we're simply going to see prices go up. We're going to see a difficult time for many companies that import goods and services. That's going to be a hard period to go through. We're going to see prices passed on to the consumers, and the cost of those tariffs. A company can absorb whoever's import. Let's say Apple, for example, they import iPhones from China. Now, Apple could absorb the entire cost of those tariffs themselves and not pass any of that increased cost on to the consumer. That's unlikely, but they could do that. If they do that, they'll have lower profits and be constrained in other ways. So it's not going to be good. So if the tariffs actually happen and occur the way Trump is threatening, even for a short period of time, we're going to see some serious dislocations and immediate price increases. Obviously, prices will go up day one. So that is going to happen. And only gradually will they come down as people shift production to the US, which is what Trump's goal seems to be. But given that that is Trump's goal, he says, bring the manufacturing home, it suggests that he's thinking about these tariffs in a long-term way, that this is going to be a long-term undertaking and not short-term. On the positive side, if Trump is successful in terms of negotiating lower tariffs for US goods going to foreign markets, then that could be very, very beneficial. So what am I saying? It's either going to be very bad or very good, or someplace in between. It all depends on how he puts this into place and how he plays the cards. But reading what he's saying and reading between the lines, it looks to me that this is a long-term gambit he's doing. He's going to put tariffs into place for quite an extended period of time, and it's going to damage all sorts of industries, all sorts of businesses, right up and down the board. I mean, so much stuff gets imported. The US imports trillions of dollars worth of goods and services every year. All that stuff is going to be much more expensive, and that's going to flow into the bottom line of the consumer eventually in some way, shape, or form.
Yeah, and one thing we always remind our viewers is at UBS we have sort of long-term views, and we of course recommend diversified portfolios, which especially in these periods of uncertainty and volatility are really key to kind of maintaining some sanity when it comes to your portfolio. But as we wrap up, Octavio, I think the question, going back to stagflation, which by definition is when you have simultaneous high inflation, slow economic growth, and increasing unemployment, which is essentially the opposite of what we saw in 23 and 24 as inflation was coming down and jobs are going up. If that does begin to happen because of tariffs or some other factor, what is the opportunity for investors? How do you recommend they kind of position amidst that kind of uncertainty and potential stagflation?
It's a very difficult one. I mean, it's very hard to then find businesses or industries that are not so dependent on that. So I think there's certain sectors that might do very, very well indeed. Sectors that can ramp up production without too much difficulty. I'm thinking about things like the oil industry. So they tend to have excess production. As prices go up, they can produce more quite easily. There's all sorts of manufacturing industries where that's not the case. They can't easily ramp up. Many are operating at capacity at the moment, and that doesn't happen. So I think something like the oil industry looks good. Anything like consumer goods looks pretty good as well, to the extent that they don't import too much of their raw materials and things of that sort. That looks good. The question then becomes, what does the Fed do in this situation? If they start to see prices increase, they will be tempted to increase interest rates to counter that and get the inflation under control. Even though in that case now, the inflation is not caused by monetary policy the way it usually is. I mean, the inflation we saw most recently was all due to the Fed printing lots of money. With tariffs, that's not going to be the case. So they're going to have to counteract the tariffs with something that didn't really cause the tariffs, i.e. higher interest rates. That's going to make bond prices plummet. It's going to be bad for the stock market overall. So I think the cautious investing thing to do would be maybe to consider putting more cash on the sidelines for a period of time, seeing how the land lays, and then getting back into the market. I think it's a good time to be parking money on the side and sit on your hands and just wait to see what occurs.
Octavio, that's great. And just also as a reminder to our viewers here, the CIO house view is that there are some areas to put your cash to work. Obviously, you have to be selective, especially with this uncertainty, and make sure you're talking to your financial advisor about it. Octavio, thank you very much. Certainly a lot to consider as we look down the road at more uncertainty. Good to see you, Octavio Morenzi from Optimist. Thank you
Thank you so much.
Have a good one. And for more information from Octavio and the rest of our partners that we consult with here at UBS, plus our own Chief Investment Office, you can check out our Insights website at ubs.com/views. Plus, you can follow UBS on social media. We're on LinkedIn and Facebook. We're also on Instagram. You can follow the studio at UBS Trending. Lots of content there for you. And as always, if you have any questions about what we spoke about today, make sure you're chatting with your financial advisor. Until next time, I'm Anthony Pastore. Have a great rest of your day, and remember to keep your eyes on what's trending. Thanks, everybody.